welcome to Business Law course. This is the fifth part of finance law topic. This is Sujana speaking. At the previous part, we have discussed about the definition, the concept, and several classifications of financing activities. Here we are continuing with the other classification. The next classification is consumer finance. Based on the terminology, we can see here there are two words, consumer and finance. So the financing activities here is for the consumer. Thus, the financing here is for the consumption. Compared to the leasing, leasing is focused on doing business. So the fundraise is for doing business. Meanwhile, in consumer finance, the using of the object or the capital or the money is given by the financing company would be used for personal consumption. So consumer finance here is a loan or credit granted by a finance company, which act as the financing company here, to debtor. So the debtor here is the customer for the purchase of goods and services. Here is the keyword here, for the purchase of goods and services. So these goods and services is to be consumed by the customer, not for doing business, not for doing an activities in trading, in making services to earn profit or money. So here the using of the goods and services will be directly consumed by the consumer and not for the purpose of production or distribution. So sometimes people might be confused to distinguish between the consumer finance and leasing, because the institution that do the activities usually sometimes is the same institution, because when your company activities in the date of establishment is financing, so you can do many types of activities of financing. So your company can do leasing and also can do the consumer finance. But the key word is, it is a consumer financing when the using of the object is for consumption. But it is called leasing if the using of the object is for business. So the object sometimes can be the same object. Let's say a car. You need a car, but if you need the car for your daily activities, to go to the office or to traveling on holiday with your family, so the car, when the financing company give you some fundraise to provide the car, so the car is for your consumption. So this type of financing is consumer finance. But if you asking for a car, you are proposing for a fundraise of a car, but you are going to use the car for a business. Let's say to do the online taxi, or maybe you need it to distribute your product. So this type of financing is leasing. So that's why in leasing part, I told you sometimes people call everything is leasing, but actually it's not always leasing. It depends on the activities of the financing, the purposes, and also the characteristic of the financing. So if the using of the object is for consumption, so it's consumer finance. But if the using of the object is for business or to get profit in the production and distribution activities, so it is leasing. There are some benefits of consumer finance activity. For the financing company, it would be the acceptance of interest and administrative costs, because the one who receives the facilities of this consumer financing have to pay back the fundraise, so it would be the profit for the financing company, and it's also would affect the the supplier, because now the supplier could increase the sales. It's what happened with the motorcycle and the car consumer financing. So the seller of the car and also the motorcycle would get the advantage by the existence of these financing activities. It will also help the customer an opportunity to buy or own something that they don't have enough money for now. Let's say that you want to buy a car, the price is 200 million. You don't have 200 million, but you only have 100 million. But you know you will have the 100 million later, but maybe it would take 3 or 4 years from now to collect the other 100 million. So you can go to the consumer financing company to be funded with 100 million rupiah. So then the car could be provided, and now you can have and use the car. So it's also bring you benefit. So the three parties here got benefit. And in addition, the consumer financing is not always just in form of vehicles or housing that you can use for your life, but also in another types of consumption, like for education. You can use it. You can use the facility from the consumer financing, because consumption here is not always talking about something tangible, but it can also use for the other idea, just like education, for example. Here are some examples of company that use their activity in consumer violence. Of course, there are more than just three. You can find the other example in internet or other sources of information. Once again, to protect your right in the engagement of consumer financing, whether you are the provider or the user, you have to read carefully the agreement about the consumer financing. Then you can protect your right, and also you know your obligation in detail, so there would be no different understanding between the parties. With a good understanding of contract, also you can avoid the possibility of the dispute in the future days. So to conclude, consumer finance is financing activities to provide a party with money to consume a certain goods or certain facilities, could be in form of housing, vehicles, or even education or another type of consumption. So here is the end of the part 5. Hopefully you still have enough energy. Encourage yourself, because we are going to continue with the other part. Thank you.